time you want. You're also totally allowed to park your money in China, where you enjoy substantial high rates. For example, 1 year fixed deposit in China, RMB, you're looking at more than 3% right now. So it's pretty meaningful in terms of the investment value of the RMB. Now, going back to Shanghai Economic Zone, it was announced actually last September in China. And it's a pilot program where China is trying to use the free trade zone to really promote certain industries. In this case, promote financial, insurance companies, banks, non-banks, leasing company, and also shipping, because I think China really wants to develop Shanghai being a financial center as well as a shipping marine center in Shanghai. And also industries such as entertainment, culture, education, healthcare, trading, gaming. All those are encouraged industry where the government will have substantial tax benefit as well as simplified process in setting up companies within the free trade zone. A lot easier than if you were to set up a holding company in Hong Kong, because the transaction that I pointed out was actually was prior to the Shanghai free trade zone coming into play. So this could be outdated information, because all the advantages Hong Kong enjoy will be shifted to Shanghai, and there will be probably more than one free trade zone in China going forward. Now, what's good about the free trade zone is, in China, without a free trade zone, when you borrow RMB, you pay 6 to 7% as allowance. That's pretty high compared to US dollar. When you borrow in the Hong Kong market, you basically pay 4 to 5% range. Now, when you borrow from RMB from the free trade zone, you basically pay somewhere in between. I think the idea is to use the free trade zone to really liberalize the interest rate environment, to let the market determine the lending rate, the deposit rate. And in addition, it allows companies who are registered, who are doing business within free trade zone, to really borrow RMB from offshore, which is a key part of what the government is trying to do. Right now, with Hong Kong, I want to make sure I'm okay in terms of time, Singapore, London, capturing all those sizable RMB offshore. For Chinese currency to become fully convertible, and also certainly in terms of full convertibility of the capital account, China needs to ship some of those RMB back to China. So with opening up of the free trade zone allows offshore RMB to go back to China through multinational companies operating within the free trade zone to borrow RMB offshore. Year to date, already some transactions have taken place. Citibank certainly have done one transaction where they pool all the RMB for a European pharmaceutical company. I think this is Roche. Basically combining all the offshore RMB and RMB within free trade zone from a netting perspective there. So this is much simplified from a treasurer's perspective. Manage your liquidity, your cash. And also, for example, Nokia has also borrowed from within the free trade zone to lend to Nokia offshore. Because Nokia, because it's a big company, they have receivables and payables in RMB. So this is natural hedge for them. So all this is taking place. It's a very dynamic environment, and I'm happy to be part of it. And certainly I would be glad to share more information and during the panel discussion session. Thank you. I guess that leads to the next panel speaker. Nikki, you want to go first?
I was going to step up, but you really don't want me running your technology. How many people in the room are doing business with China right now? okay? I want the people in the room to look around at those hands and look at the people on the panel here, because if you're thinking of doing business with people in China or with the Chinese government or internationally, the thing I will guarantee you is you can't do it on your own. You can't figure it out by going to the website and trying to do something or other. You're going to need advice, you're going to need partnership, you're going to need relationships. And I want to offer that a lot of the people in the room and on the panel, like myself, we're doing business in China now. Please come up to us at the reception and ask what we're doing and how to do it. Did I kill enough time?
Good evening, everyone. My name is Nikki Hugh, and I'm an International Trade Manager at the Georgia Department of Economic Development. We often hear about trade from a macro perspective, for example, U.S.-China relations or U.S.-EU relations. But what about from a micro perspective? So where does Georgia stand in this global economy? Are we competitive? And specifically, what is Georgia's relationship with China? And what is the state of Georgia and China doing to facilitate more trade and economic development? So I will go ahead and warn you, there are lots of numbers and charts in this presentation, but when we're talking about trade and economic development, numbers are the best way to capture it. So here's a quick snapshot of China, Georgia, and the U.S. And as you can see, China's GDP growth rate is still significantly higher when compared to other markets. So this shows that China is still developing and there are plenty of opportunities ahead. So what does Georgia and China's relationship look like? So I'm going to briefly highlight some of China's investment in Georgia and give you a few Georgia-China trade statistics. So as we know, FDI is a significant contributor to economic development. Currently, the state has over 3,000 international facilities. However, only 18% of these investments come from Asia, and an even smaller percent comes from China. Among the Asian region, Japan, Korea, and India lead foreign direct investments in Georgia. Japan has 387 facilities, Korea 53, and India 43. China ranks fourth with 21 facilities, employing just over 400 Georgians. Tourism for China is also becoming very popular and has generated revenue and created jobs for the state as well. So although China might not be leading in FDI here, they are leading in imports for both the state of Georgia and the U.S. as a whole. China is our largest supplier of goods, mostly in the sectors of electronic products, consumer items, plastics, appliances, and clothes. So as we move away from investment and dive a little bit into trade, the state of Georgia imported over $75 billion last year, making us the 8th largest importer state in the nation. The state's overall imports increased 3.6% from last year. So our imports from China has increased every single year. Of that $75 billion that we imported last year, $17 billion of it was spent solely in China, which is an 11% increase from 2012. So as for exports, which is what I focus on, 2013 was a record year for Georgia. We exported approximately $37.6 billion, helping us move up the ladder to be ranked as the 11th leading exporting state, up 1 from last year. So in recent years, as you can see, Georgia has been steadily increasing in our exports. We're the #1 exporter in poultry, wood pulp, paper, carpet, kaolin, and peanuts. So China is the 3rd U.S. largest export market for the United States. But for Georgia, China is actually our 2nd largest export market, coming 2nd after Canada. Since 2008, there has been an 86% increase in Georgia exports to the China market, which I think is pretty good. This shows that Georgia is becoming more competitive on an international level and is building stronger ties with China. With Georgia companies diversifying their client portfolio and China's middle class rising, Georgia exports are expected to continue to rise. Last year, we exported over $3.7 billion to China alone, with some of the top exports including aircraft, cotton, wood, aluminum, engine, and poultry. Total trade between Georgia and China is valued at approximately $21 billion, 17 billion of it being imports and 4 billion of it being Georgia exports to China. So Georgia has a very diversified market of suppliers. You have your traditional industries, which include agriculture, automotives, building and construction. But then you also have your emerging sectors, such as clean tech and information and communication technologies. Although we don't always recommend China as being your first export market, it is a market that should be on your radar. China has begun to do many reforms which can create endless opportunities for U.S. goods and services, and some of the leading sectors that we think Georgia companies could thrive in include environmental, aviation, and of course your ag-related products. So I'll also share a recent success story. Our trade team was able to connect a small South Georgia pecan grower with a Chinese buyer. And recently they sold $600,000 worth of pecans to this Chinese buyer. And so this shows that you don't have to be a big corporation to get big deals. You can be from small town Georgia and do business with one of the largest economies of the world. So as the trade deficit between the U.S. and China, or even Georgia and China, continues to grow, U.S. government entities are encouraging and providing resources to local companies with export assistance. So this slide is a list of all local contacts based here in Atlanta who are here to help you. So the Georgia Department of Economic Development, we partner with a variety of other agencies and collaborate with the Small Business Administration, or EXIM Bank, to support any of your funding or financing that you may require. We also work with the Small Business Development Center at the University of Georgia for those that are new to exporting or just starting to explore a market. And we also partner with the U.S. Commercial Service at the federal level, and they are able to provide additional trade-related services and activities as well. So, and the great thing about it is that most of the services provided by the U.S. Export Assistant Team are free of charge. So what exactly does the state do? So the International Trade Division, which I'm a part of, our goal is to create jobs through export. We believe that for every job created in making a product, another job is created in getting that product to market. So we offer global insights and global connections. Global insights means providing you with market research and resources to help decide which markets are most attractive for you and your products. And global connection means identifying and connecting you with potential buyers and partners. We can also perform due diligence reports to help vet potential customers on your behalf. So the state has representation in 11 strategic markets. We're located in Brazil, Canada, Chile, China, Colombia, Germany, Israel, Japan, Korea, Mexico, and the UK and Ireland. These markets represent 60% of Georgia exports. And in fact, all of our representatives were here last week meeting one-on-one with Georgia companies and touring around the state. For China, it is the only market where we have two representation. Seth Jacob is based out of Qingdao. He does investments for the state. And Paul Swinson, one of our newest additions, he's based out of Shanghai and does trade for the state. They both offer a wealth of knowledge and are an excellent, excellent resource. So all of our representatives are feet on the street. They know exactly what's going on in the market and can provide insight onto whether or not your product has potential in that local economy. And based on your distribution strategy, they're able to help find potential partners and facilitate that commerce between you as a Georgia supplier and that international buyer. So in addition to the service mentioned on the previous slide, another channel that the Georgia Department of Economic Development does to promote Georgia exports is to participate in select trade shows around the world. And Georgia companies are able to exhibit and share booths at a discounted rate. And this helps them enhance their global presence and gain international sales. We also coordinate trade missions. This year, we actually have 2 trade missions going to China, one in July and one in September. The one in July will be focused around the Horticulture Expo, education and tourism. So if there are any companies that are in the agriculture or products, commodity equipment realm, definitely you're encouraged to apply. The September mission, it'll be multi-sectored, and it'll piggyback off of our Seuss Japan event. If you're interested in attending or participating in any of our trade missions or participating in a trade show, please feel free to check out our website at georgia.org/trade. So lastly, our team is comprised of 10 members. Each trade manager has an industry specialty as well as a region. We're not country specific like our investment team, and Stella Xu would be your point of contact for any Georgia-China initiatives for the state. I concentrate on the information and communication technology statewide and work with exporters in central Georgia. So if you're interested in exploring a new market, or if you're exporting and you want to know more about how we can assist you, or if you're just interested in about what opportunities there are for Georgia in China, definitely feel free to see me afterwards. But thank you for this opportunity to discuss a little bit about where Georgia stands in this global economy and what we're doing to promote others around the world.
Thank you, Nikki. Next speaker is Lei Daw, and certainly he has been with TVS exactly 10 years. And certainly he brings a totally different perspective in terms of this company and what they do in China.
I promise my presentation doesn't have any numbers in it. Basically, I just want to show you what we have been doing in China for the past 10 years that since we're involved in the architectural design industry. Oh, sorry. Okay. Yeah, TBS Design actually is a local company in Atlanta. We have about probably close to 40 years history here now, and there's a couple famous structure you're probably all familiar with, like Aquarian, Georgia World Congress Center, all designed by us. So I have been with the company for past 14 years. And everyone knows China is a big, have a very big construction market in past 30 years. Actually, a lot of the U.S. companies are actively involved in that market from the beginning of the opening up. So TBS actually started being involved in the local design, architectural design services probably 12 years ago. Because we are a full service company, we have architectural service, interior design service, and master planning services. So we have a full office rotation around the globe, Chicago, Atlanta, Dubai, and Shanghai. These are some of the market service, segments that we're involved in. In China, basically, we go through from the master planning all the way to the interior design services. So the process normally started with a business connection or RFP coming through our door. Then we answer that RFP. Normally, it will end up either a direct contract with us or through international competition. That's how the design industry normally works over there. And interestingly, the competitors almost always a European company or a US company. Very few chance you will compete directly with a local company. So that's always my experience in past 10 years. Sometimes you will get the big names like SOM and Gensler. I don't know if you know those names, but they are big in the architectural design industry in the US. But generally speaking, you will encounter all the big names in China. So these are some of the projects we're involved. Our clientele normally involved with either a private developer or a government body, because TBS tend to design these big civic spaces and big master planning. So the government involvement is almost always necessary, and so that's give us a unique experience into how the city is working in China. There's some other, like this is in Jinan, Central Province. Some of the cultural arts projects we're doing over in China as well. This is a automobile museum. You know, we always call past 10 years is almost golden years for architects in China because the amount of the building they're building and there's just so many opportunities that you will have over there. For me, it's almost come to like a full circle because when I worked in China, I worked with an institute. We act as a local design architect for John Portman. So after I came over here, I switched the table basically. These are some of the, we have projects in Nanjing and in Beijing and Tianjin, those big cities. Working in China, oftentimes the situation is very different, say working in Dubai or in the US, because the contractual relationship and the local, the client expectation is sometimes it's unrealistic, sometimes it's very hard to, because cultural barrier, hard to understand fully. So whoever involved in that business environment has to be very flexible, and because situation always be very fluid. So you have to be able to react very quickly to the situation, because you know architectural business is extremely interesting to me because of all kinds of the clients we can meet and the demand they will have. This is some of the residential building we're doing over there. You can see the density is very dense. It's very different from what you see here. Some of the villa designs. Since I'm mainly working in the hospitality studio and convention center studio, so we do a lot of the hotels and the convention centers over there. This is one of the, I mentioned the competition. This is one of the competition we recently did, like almost 6 months ago. Competitors are all international architects. So this is a 300-room hotel. Then for the convention centers, we started working in China on the convention center because we're #1 architects in the US for designing convention centers. So that's naturally is the market segment we will go to because that's our strength. This is the first building we built in China. In China International Exhibit Center. This is in Beijing. Then afterwards, we participated a few major convention center competitions. And currently, we have a couple on the drawing boards. And we also have a Nanjing Convention Center. We probably visited that center already. Jinan is the one is currently on the drawing board. So this is Dalian Convention Center. This is the Nanjing Convention Center that it's already being completed. And recently, actually, client coming back to us asking for a second phase. This is the Tianjin Convention Center. They built this building in 10 months, including the design time. So you can see how fast the pace can become when you're working in China. And that's why sometimes it's a dream place for architects, because you can get your dream realized sooner than in the US. That's another reason anybody have a dream should go and work there. And the other thing is the working process actually involves people from everywhere almost. Sometimes we will have people working in Moscow, and people working in US, and people in China all work together at the same time. This is under construction of the Ningxia International Exhibition Center. This is last slide. This is one of our, my favorite actually, the Tianjin Convention Center competition entry. So, yeah. I don't know, oh, sorry. Okay. I think that's all I have. Thank you.
Okay. Let me try without the mic. Can everybody hear me okay?
Yes.
Perfect, thank you. And again, I need to plug this up. Can I get a little bit of tech support? Thank you. So I apologize for the change in agenda. I just moved back from Singapore back into Atlanta. And Singapore, for those who've been, is a very small place. So coming from Mansell Road up in Alfred, coming down, actually I traveled twice this length of Singapore already. So I wasn't quite sure of the time. So I do apologize for being late. So, good evening, everyone, again. So thank you for your time. And what I hope to do tonight is to really try to convince everybody that China is a good place to be for you to either develop business, to export from, import from, work with our wonderful colleagues from the Georgia Department, or Georgia State and Georgia Department, our colleagues, to really grow the business between China and Georgia, as well as China around the world. Because the perspective I'm going to bring and hopefully share with you is that having been a marketing director in China, having ran China as part of the Asia Pacific region, and seeing all the countries in Asia, now as VP of the emerging market, looking at all the emerging market opportunity, China is still one of the best places to be for businesses, in my opinion. So again, I hope to share that, some of the thoughts with you, and then also share what UPS actually done historically over time to play in that market and share some thoughts that I personally have, as well as some of the best some of the research that I came across in terms of what you need to do to play in that market, and then finally convince you to use UPS when you're actually trying to grow in that market. So with that, there's been a lot of noise lately. If you read anything about China, is China still an attractive market for business? How attractive is it? GDP has gone down, the market is crashing and burning. You can see a whole range of discussion. I'm here to tell you really is not the case. China is going through a major restructuring process right now. As part of the new third millennium, they're actually moving from a different type of economy to a new type of economy. My friends at Frontier Strategy Group was nice enough to put a nice graphic together for you. So if you look at the history of the third millennium that actually has started from Deng Xiaoping, Premier Deng Xiaoping, all the way through now with Xi Jinping, there's actually quite a bit of shift. So Deng Xiaoping actually opened up China. Most of you are familiar. He came to China, Georgia Tech University, visited, and really tried to open up China to the marketplace. Really from 1993 to 2002, that continued, but really the growth from 1993 to 2003 was really fundamentally different. The China that we all kind of think of as a really big, growing, fast export market really happened around that time. That continued to 2003, but unfortunately 2008, the economy fell. China no longer can depend on export in the global economy and an export economy. So, hence the new shift, really back to what a true developed economy can be and should be, which is a balanced economy. No longer depending purely on export and really developing more of a consumption-driven economy and really balancing the complete set. Much like the US has become, UK, Japan. So that will take some work. And to do that, there will be some shift that goes through. And we're at the very beginning. China's at the very beginning stages of that. And if they can pull this off, I personally believe by 2020, China will continue to be a very strong market and a very interesting market for everyone to be part of. So with that said, I'd like to share with you some thoughts in terms of where I think China's going to be going forward. The economy in the near term, 2-3 years, China is now the world's third largest economy, if you're not aware. It's 2.5 times the size of Germany. It's 50% the size of the US. And like our good friends here, the CAGR is at 7%, 7.8, whatever you want to use, right? So no one else is that size of economy is growing at that fast. How are they doing it? The government really has been doing it through stimuluses, offering money up. That no longer is a continued viable option as well. So right now, you're seeing a lot of shifts in economies because the government is really trying to balance between three things. One is investments to keep the GDP growing, count on the consumption of Europe, US, and whatnot to really pull the export, but then really do some things to really drive consumption. One of the big things out of the new millennium that I really like is the change in the hukou law. For those of you who are not familiar with hukou, it's almost like a little passport you carry with you based on where you were born and where your almost citizenship is back to the city and state you are. It's been a big limiter in terms of the movement of population. Some of the changes are that it actually allows people to move within new developed cities. And that's going to be critical as you think about markets you want to play. Because the rise of not the major big cities, Shanghai and Beijing, though they will continue to grow, but the new cities in the West, as well as some of the other cities, will actually be interesting markets and actually be growth rate. I'll share some stories with you a little bit later on what that means. The economy, mid to long term. I personally think, and some of the research out there shows, that 2020, the economy is actually going to flatten out around 5%. That's still a really good number for a size of economy that it is. And actually, you'll actually increase to about 14% of global GDP. So that'll continue to be a very attractive market for everyone to look at. Also, you'll see more Chinese firms that are emerging as global players. They'll actually be investing in the US. You hear the recent spate of Chinese companies buying US firms for brand presence and get into market access. That will happen more. And there'll be opportunity for them to build markets here, but also China market open up more for businesses that are interested in playing those places as well. So again, a balanced economy is good for both the Chinese company as well as other companies that are small and big interested in doing business in China. Okay, so a little bit of thoughts about winning in China. I talked about cities and how important cities are. Share some facts in detail. The graphic is a nice little piece from McKinsey Global Institute. They actually have a very nice reference piece that you may want to look into that talked about China's cities. What they're basically saying is that by China's city in 2025, over 100 cities will have over 1 million people in China. Now, using that as a point of reference, compared to a European city, there's only 35 cities in all Europe that has more than 1 million people. Of that 100 plus cities, there's over 25 that will have 5 million people in those cities. So the rise in consumption I talked about will fundamentally change, hopefully, China as a business opportunity for everyone as well, and become a more attractive market for everyone else. So to play in China effectively, don't think of China as a homogenous country, just like we don't think the United States is a homogenous country. There's a lot of different parts of China. Again, the McKinsey study or the research that they did was they actually broke China into 22 clusters. And within those 22 clusters are different buying patterns, different investment strategy, different appreciation of price. So I would again recommend that if you get a chance, take a look at that article. And actually it's very helpful in terms of determining where you want to play. The other thing you should be aware of when you go into China, just as we are, is the strong local competitor. China has been a trap for people who don't respect it. And China is a very difficult market to be successful on if you don't have the right people, the right connections to the government, and a really good strategy to play. And that actually has changed over time. Because there are local companies, just like Japan did in previous year, the Chinese government are investing in key companies, strategic verticals, and industries, allowing them to grow. So when you choose to play in China, be very sensitive about where you want to, what type of products and you want to sell to China, or you want to buy from China, and your partners that you want to deal with in China. Because one day, they might actually be a partner in your country, or in turn be a competitor, which actually would be competing directly in some of the international space that you're in. Market will change constantly. I think that's probably one of the most constant things that you'll have in China. There is not a 5-year plan that actually works well for business. There's not a 10-year plan. China really changes really rapidly. So I'll give you a couple of things, and I personally think you really look at a 3-year horizon for China, because that's how fast the pace of change. I think some of the architecture work that you show, it takes less than 3 years to put some of those architecture pieces together. But more importantly, the market really changed. I think there was a reference to the Alibaba and the opportunity I worked with them back in 2008. At that time, I had some inkling working with them. I had a pleasure meeting Jack Ma, which was actually fortunate. But I would have personally not thought that the e-commerce business in China would have grown as fast as it did. Now, I'll give you a data point. So the most recent data point back in 2013, they had this thing called Singles November 11. That's like the Black Friday here, I'm sorry, which is a big e-commerce day. That transaction, which is basically e-commerce, the biggest e-commerce day in China, it's actually 2.5 times in terms of revenue compared to the US. And most of it's actually done by Tmall and Taobao under Alibaba. So that change has actually grown, that particular industry in e-commerce has actually grown 20 to 30% annually since 2008. So that new business line really didn't even, just barely started back in 06, 07. It was started by a guy who had a small office with 12 employees, really I think from 2003. So again, the pace of business and the change of the business is something that you have to really be conscious of. Finally, efficient and flexible supply chain is critical. Not that I'm pitching UPS, but if you look at Henry's diagram there, that's just the financial model for soybeans, right? So if you think about a manufacturer, if you think about a high-tech firm, if you're thinking about producing aerospace, selling aerospace materials into China, potential returns, and also distribution and the combination of different supply chains that you need to be, it's now a major, complex network that you have to be part of and be very conscious of because of the speed and the change in the market. So again, that's also very critical. Also, efficiency is critical. China, for those of you that are not familiar with, it has the highest cost of percentage of logistics spend to GDP, it's around 20%. So the cost of transportation and logistics is very, very high. It's very, very inefficient. So as it's one of the new millenniums as well as the challenge of the Chinese government is to really try to push that down. In contrast, when I mentioned 20+%, US and Germany is around 5% of the GDP. So as consumption increases, as the efficiency comes in, as you think about how you get your goods into the country, out of the country, supply chain efficiencies is very important. I want to share